Hi, everyone, and thanks for tuning into another episode of Budget Investing. Today, I want to go over some big investing news that have come out recently and how this may be impacting us as a budget investor and what we should really be paying attention to over the next little while. So, the first one is all about the CDC reducing and changing their current recommendations on 110 different countries for travel. Now, this doesn't really sound like investing news, but you need to remember that by lowering a lot of these warnings for a lot of places, we are going to have the ability to travel more. The United States is no longer in extreme danger zones. They're starting to come down. 3 being the worst level, of course, 1 being the best level that you could be at. So with the states no longer at a level 3, they're down to a level 2. More people are going to be willing to travel into the states, and the states are going to be more freely available to travel outside of that. Now, for a lot of people, that doesn't sound like it's going to change a lot of them until they can get their full vaccine. However, when you're able to now start to travel, you're going to have the ability to go to the different resorts, and these airlines are going to start to be able to get closer and closer to running at a profitable capacity again. So now we're going to start looking at a lot of different companies as recovery plays as they're moving into that profit piece, and their value is going to go back up. So as a budget investor, for me, this is something that I always try and keep an eye on to see where hopefully and potentially a bunch of money might swing into. This could potentially be something really good for us. The next thing that I wanted to take a look at was the potential changes that the government is looking at making to retirement. Now, in summary, this is relatively simple. They're making slight changes to student loan debt and hoping that will allow people to start investing a little bit earlier so they can retire with more money. They're going to look at pushing back the retirement age as, inflation continues to go higher, or as people, are just living longer. They're not going to be recommending the retirement as quite as early. And a few of the other changes is the way that people contribute to 401k plans. They're looking at making part of it either mandatory or increasing the contribution amount that people are allowed to make, especially if they start investing later in life. Now, how does this impact me as a budget investor? For me, this is music to my ears. This is everything that I want to hear. The big piece is on that retirement savings plan. Now, with people being mandated to put money into their 401ks or any other type of investing account, it's great news. With more money being forced into the market, values of companies and stocks are going to rise a little bit higher because there's going to be more money in play for specific stocks. Now, that works great for the stocks that I own today. They're going to be worth a little bit more money, if it's even 1%, 2%, whatever that is. But that amount adds to a lot of money into my pocket in the long run. I want to be able to buy as many stocks as I can before something like this comes out so that I can ride that wave up. Of course, I'm going to have to still be buying stocks after the fact, so it will be more expensive for me in that regard. But this does set me up for that ability to make more money because, again, more people are going to be involved in the process, so maybe companies will pay higher dividends because they'll be getting more shares purchased and so on and so forth. It just adds more money into the pot of gold that we are already working with, and will hopefully continue to drive prices up and show profitability for everyone. Now, the last thing that I want to talk about today is all of these potential changes that could be coming to the largest companies in the world. So this is Amazon, Facebook, Apple, and Google. Of course, I'm sure you've heard and seen all of the potential lawsuits and antitrusts and everything that kind of comes out against these companies, and it's starting to be taken a little more seriously recently. These companies have started to show the capacity to be monopolies. They're dominating markets even though they may not have a specific market share that's over 51%, but what they're doing is they're entering all of these different markets that aren't really related to what they were initially doing, and they're just bulldozing their way through it. The perfect example that I'm sure that everyone's aware of is Apple. They were a music company and a phone company. Now they're a watch company, and all of a sudden there are rumors that they're going to become a car company, and they just they make these statements and They purchase into these areas and they just push everyone out, and they're just not allowing any competition to succeed. I'm sure you've heard of with Amazon how they've purchased specifically like diaper companies or dog food companies, and they put their items that they sell right on the first page. So if you were to look up diapers or dog food, you don't get to find any other competition. They push everyone else away. They undercharge until everyone else is just gone and out of the market. So there's so much competition, and they're just dominating it, and it's not a fair playing field for everyone anymore. These changes, which are of course likely to change a lot over the next few years as things get finalized, might require these companies to break up. As a budget investor, that's terrifying, especially if you have a large position in any of these companies. You don't want your Facebook or your Google stock to get split up into 4 or 5 different companies, as now maybe the reason why you're holding it is no longer there, as it might be spread out and you might be better off using that money elsewhere. Same thing with Amazon. If you were purchasing it for the marketplace, or maybe for the music or the movie streaming services, if all those get split up into 3 things, you might not purchase an Amazon stock anymore. So there just adds a whole lot of uncertainty to these companies that people may start pulling money out now, as they might get a little bit worried or concerned. But there's just so much to figure out that I think for today you're still safe to purchase more of these stocks and to continue to ride those waves up. But you need to really watch it closely, as this will sneak up on everyone and we won't see it coming. And all of a sudden, it's going to be right there and everyone's going to go, holy crap, and they're going to panic sell, and you might lose a lot of money. So just be careful if you are holding it. But I still think you're safe as of now, but this could be a few years away. Hopefully you enjoyed today's video and the update on what's going on in the market for ourselves as budget investors to watch. I think there'll be huge changes that could potentially come out of this information that would really make a positive impact for us. But if you did enjoy today's video, please do comment, thumbs up, and subscribe. I'd love to hear from you. We're starting to really grow a nice community here, so I'd like to continue with that. Otherwise, thank you so much for watching, and I'll see you in the next video.